Question 1. Which of the following is a key factor in determining eligibility for Hawaii's Temporary Disability Insurance (EDR) program? A. The applicant must have been employed for at least 12 months prior to filing for benefits. B. The applicant must have a minimum of 10 employees working for the employer. C. The applicant must be employed at least 20 hours per week. D. The applicant must have been diagnosed with a chronic illness. Answer: C. The applicant must be employed at least 20 hours per week. Explanation: in Hawaii, the Temporary Disability Insurance (EDR) program provides wage replacement benefits to employees who are temporarily unable to work due to illness or injury. To qualify for TDI, one of the primary requirements is that the applicant must have worked at least 20 hours per week for their employer. This ensures that individuals who have a minimum level of employment are eligible for benefits. The other options are not correct because A. There's no 12-month employment requirement for TDI eligibility, though some criteria may vary. B. The number of employees an employer has does not determine an employee's eligibility. D. Having a chronic illness does not automatically qualify someone for TDI. Eligibility is more related to work status and temporary inability to perform job duties. Question 2. Which of the following is considered an exclusion under Hawaii's Temporary Disability Insurance (EDR)? A. Disability due to pregnancy or childbirth. B. Disability resulting from a work-related injury. C. Disability due to alcohol or drug use. D. Disability occurring while on vacation. Answer: C. Disability due to alcohol or drug use. Explanation: Hawaii's Temporary Disability Insurance (EDI) excludes disabilities that result from substance abuse, including alcohol and drugs. This is a common exclusion in disability insurance policies to prevent claims related to self-inflicted disabilities from substance use. The other options are not correct because A. Disability due to pregnancy or childbirth is typically covered, although there may be limitations or specific conditions for payment. B. Disabilities resulting from work-related injuries would typically be covered under workers' compensation insurance, not TDI, but they are not excluded under TDI. D. Disabilities occurring while on vacation are generally covered by TDI as long as the disability is temporary and meets the criteria for benefit eligibility. Question 3. Scenario question: Mr. Martinez has been employed for 18 months at a construction company in Hawaii and suffers a back injury that leaves him unable to perform his duties for several weeks. He files a claim for benefits under the Hawaii Temporary Disability Insurance (EDR) program. What should Mr. Martinez do next to ensure his claim is processed? A. Submit a medical certification from his physician along with his claim form. B. Wait for his employer to file the claim on his behalf. C. Only submit a claim if he is unable to return to work after 8 weeks. D. Apply for Social Security Disability Insurance (SCI) before submitting a TDI claim. Answer: A. Submit a medical certification from his physician along with his claim form. Explanation: in Hawaii, to file for Temporary Disability Insurance (EDI) benefits, employees are required to submit a claim form along with medical certification from their healthcare provider. This certification proves that the employee is temporarily unable to work due to illness or injury. Mr. Martinez should not wait for his employer to file the claim or delay his application based on a time frame such as 8 weeks. The other options are incorrect because B. While the employer may assist with the process, the responsibility for submitting the claim lies with the employee. C. The claim should be filed as soon as the employee becomes temporarily disabled, not after 8 weeks. D. While SSDI may be applicable in some situations, it is not necessary to apply for SSDI before filing a TDI claim, as TDI specifically covers short-term disabilities in Hawaii. Question 4. Which of the following best describes the elimination period in Hawaii's Temporary Disability Insurance (EDR) program? A. The period during which an employee is not allowed to file a claim for disability benefits. B. The waiting period before an employee becomes eligible to receive disability benefits after filing a claim. C. The period during which an employee must continue working after filing a claim. D. The time frame during which the employee must be hospitalized for treatment before receiving benefits. Answer: B. The waiting period before an employee becomes eligible to receive disability benefits after filing a claim. Explanation: the elimination period refers to the waiting period after an employee becomes disabled and files a claim before they begin receiving disability benefits in Hawaii. This is typically a 7-day waiting period, which is a standard provision in many disability insurance policies. The other options are incorrect because A. The elimination period is not about preventing claims from being filed. It's a waiting period before benefits are paid. C. There is no requirement for the employee to continue working after filing the claim. D. Hospitalization is not a requirement for receiving benefits under the TDI program. Question 5. Under Hawaii's Temporary Disability Insurance (EDI) program, how is the amount of weekly benefits generally determined? A. Based on the employee's average earnings during the last 52 weeks. B. A fixed percentage of the federal minimum wage. C. The employee's most recent monthly salary. D. A flat weekly amount set by the state regardless of earnings. Answer A. Based on the employee's average earnings during the last 52 weeks. Explanation. Hawaii's Temporary Disability Insurance (EDI) calculates the weekly benefits based on the employee's average earnings during the 52 weeks prior to their disability. This ensures the benefit amount is reflective of the individual's earnings and not based on a fixed or arbitrary rate. The other options are incorrect because B. TDI benefits are not tied to the federal minimum wage. C. Monthly salary is not used to determine weekly benefits under TDI. D. A flat weekly amount is not provided as benefits are tied to the individual's earnings history. Question 6. Which of the following is NOT typically considered a valid reason for denying a temporary disability insurance (EDI) claim in Hawaii? A. The employee is diagnosed with a non-work-related injury. B. The employee was not employed at least 20 hours per week at the time of the injury. C. The employee fails to submit the required medical documentation. D. The employee is receiving unemployment benefits during the claim period. Answer D. The employee is receiving unemployment benefits during a claim period. Explanation. Receiving unemployment benefits during a disability claim does not automatically disqualify an employee from receiving temporary disability insurance (EDI) benefits. TDI benefits are based on the employee's ability to work, and receiving unemployment benefits does not affect eligibility for TDI unless the disability claim is determined to be invalid. The other options are valid reasons for denying a claim. A. Non-work-related injuries can still be covered under TDI as long as they meet the eligibility criteria. B. Employees must work at least 20 hours per week to qualify for TDI. C. Failing to submit required medical documentation can result in denial of the claim. Question 7. Scenario question. Mr. Davis is a part-time employee at a retail store in Hawaii. He works 18 hours a week and recently experienced a shoulder injury that has left him unable to perform his duties. Which of the following best describes Mr. Davis's eligibility for temporary disability insurance (EDI) benefits? Mr. Davis is not eligible for TDI benefits because he works less than 20 hours per week. B. Mr. Davis is eligible for TDI benefits because he has been employed for over 6 months. C. Mr. Davis is eligible for TDI benefits if he can provide a medical certificate from his doctor. D. Mr. Davis is eligible for TDI benefits because he works part-time and the injury is not work-related. Answer A. Mr. Davis is not eligible for TDI benefits because he works less than 20 hours per week. Explanation. Under Hawaii's TDI program, one of the eligibility requirements is that employees must work at least 20 hours per week. Since Mr. Davis works only 18 hours per week, he is not eligible for benefits under TDI. The other options are incorrect because B. Length of employment alone does not determine eligibility. Working at least 20 hours per week is crucial. C. While a medical certificate is necessary for claiming TDI benefits, it does not bypass the fundamental eligibility requirement of 20 hours per week. D. TDI coverage applies to temporary disabilities, but requires employees to meet the work hour requirement. Question 8. Which of the following is NOT a common rider or optional benefit in a disability insurance policy in Hawaii? A. Cost of living adjustment (COLA) rider. B. Own occupation disability rider. C. Vocational rehabilitation rider. D. Temporary disability income replacement rider. Answer D. Temporary disability income replacement rider. Explanation. In disability insurance policies, common riders include the cost of living adjustment, COLA, the own occupation disability rider, and vocational rehabilitation coverage, all of which enhance or customize the base policy. However, a temporary disability income replacement rider is not a typical rider in disability insurance policies. The purpose of disability insurance is already to provide income replacement during a period of disability, so this is not considered a separate rider. The other options are valid riders. A. The COLA rider adjusts the benefits based on inflation. B. The own occupation rider covers disability when the insured cannot perform their specific job duties even if they can perform other work. C. The vocational rehabilitation rider covers the cost of retraining the insured to return to work in a different capacity. Question 9. Which of the following best describes the interaction between temporary disability insurance (EDI) benefits and workers' compensation in Hawaii? A. TDI benefits are always reduced by the amount of workers' compensation benefits. B. TDI and workers' compensation benefits are paid simultaneously with no coordination. C. TDI benefits are coordinated with workers' compensation benefits to avoid double payment. D. TDI benefits are paid only if the workers' compensation claim is denied. Answer: C. TDI benefits are coordinated with workers' compensation benefits to avoid double payment. Explanation: in Hawaii, temporary disability insurance (EDI) benefits are coordinated with workers' compensation benefits to ensure that the total benefits paid do not exceed the employee's normal earnings. If an employee is eligible for both TDI and workers' compensation, the benefits will be adjusted accordingly to avoid overpayment. The other options are incorrect because TDI benefits are not automatically reduced by workers' compensation benefits. Instead, the two are coordinated. B. The two benefits are coordinated to prevent duplication. D. TDI benefits can be paid independently of workers' compensation claims if the disability is not work-related. Question 10. Which of the following is the primary purpose of Hawaii's Temporary Disability Insurance (EDI) program? A. To provide workers' compensation for injuries sustained at work. B. To provide income replacement for employees who are temporarily unable to work due to illness or injury. C. To reimburse employers for employee sick leave payments. D. To offer long-term disability benefits to workers. Answer: B. To provide income replacement for employees who are temporarily unable to work due to illness or injury. Explanation: Hawaii's Temporary Disability Insurance (EDI) program is designed to provide income replacement to employees who are temporarily unable to work due to non-work-related illness or injury. The program is not intended for long-term disability or workers' compensation, which covers work-related injuries. The other options are incorrect because A. TDI is separate from workers' compensation, which is for work-related injuries. C. Employers are not reimbursed for sick leave payments under the TDI program. D. TDI only provides short-term benefits for temporary disabilities, not long-term disability benefits. Question 11. Which of the following factors can affect the premium rates for disability insurance policies in Hawaii? A. The employee's age, occupation, and health history. B. The employee's education level and marital status. C. The number of years the employee has been with their current employer. D. The type of injury or illness the employee is most likely to experience. Answer A. The employee's age, occupation, and health history. Explanation: Premium rates for disability insurance policies are influenced by several risk factors such as the employee's age. Older workers may face higher risks. Occupation: high-risk jobs like construction may result in higher premiums. And health history: individuals with pre-existing conditions may face higher premiums. The other options are incorrect because B. Education level and marital status do not directly affect premium rates. C. Length of employment does not typically influence disability insurance premiums. D. The type of injury or illness is not a direct factor in setting premium rates, though occupation-related risks may be considered. Question 12. Scenario question: MS. Patel works as a full-time cashier in a grocery store in Hawaii. After slipping on the wet floor, she injures her back and is unable to perform her regular duties. She is a Hawaii resident and she has worked for the company for over 6 months. What should MS. Patel do to apply for temporary disability insurance (EDI) benefits? A. MS. Patel should wait until she recovers before submitting her claim for TDI benefits. B. MS. Patel should submit her claim for TDI benefits immediately, including medical documentation of her injury. C. MS. Patel must submit a written request to her employer before filing for TDI benefits. D. MS. Patel is not eligible for TDI benefits because the injury occurred at work. Answer: B. MS. Patel should submit her claim for TDI benefits immediately, including medical documentation of her injury. Explanation: in Hawaii, employees who suffer from temporary non-work-related injuries can apply for TDI benefits. MS. Patel must submit her claim promptly, along with the required medical documentation. The other options are incorrect because waiting until recovery is not required. She can submit her claim as soon as possible after the injury. C. While her employer may need to be notified, there is no need for a written request to file the claim. D. TDI benefits apply to non-work related injuries. If the injury occurred at work, she may be eligible for workers' compensation instead. Question 13. Which of the following would likely result in the denial of a temporary disability insurance (EDIA) claim in Hawaii? A. The employee has a pre-existing medical condition that contributes to the disability. B. The employee fails to provide the required medical documentation or claim forms. C. The disability is a result of an accident that happened while the employee was commuting to work. D. The employee has a disability but can still perform certain tasks at work. Answer: B. The employee fails to provide the required medical documentation or claim forms. Explanation: a failure to provide necessary documentation or forms is a common reason for TDI claim denial. Claims must include medical evidence that substantiates the disability. The other options are incorrect because pre-existing conditions are not automatically grounds for denial, although the condition may impact benefit eligibility. C. Accidents that occur during commuting are generally covered under workers' compensation, not TDI. D. If the disability impacts the employee's ability to work, they may still qualify for TDI benefits even if they can perform some tasks. Question 14. Which of the following is an example of a partial disability under Hawaii's temporary disability insurance (EDI) program? A. The employee is unable to work for more than 30 days due to a broken leg. B. The employee can perform some but not all of their regular job duties. C. The employee is completely unable to perform any work tasks. D. The employee can return to work but requires job retraining to perform the same duties. Answer: B. The employee can perform some but not all of their regular job duties. Explanation: partial disability refers to a situation where the employee can still perform some work tasks but not all of their regular duties. Hawaii's TDI program provides benefits based on the degree of disability, with partial disabilities resulting in reduced benefits. The other options are incorrect because a broken leg may lead to total disability, depending on the severity. C. Complete inability to perform work tasks typically qualifies as total disability. D. Job retraining is not part of partial disability coverage under TDI. Question 15. What is the maximum duration for which an employee can receive temporary disability insurance (EDI) benefits in Hawaii? A. 6 weeks. B. 26 weeks. C. 12 months. D. 52 weeks. Answer: B. 26 weeks. Explanation: under Hawaii's TDI program, the maximum benefit duration is 26 weeks. This aligns with the program's focus on providing short-term income replacement. The other options are incorrect because 6 weeks is too short. A period for TDI benefits. C. TDI does not offer benefits for 12 months, so this is more typical of long-term disability insurance. D. 52 weeks is too long. TDI benefits are limited to 26 weeks. Question 16. Which of the following is a common exclusion in Hawaii's temporary disability insurance (EDIA) program? A. Disabilities resulting from self-inflicted injuries. B. Disabilities due to pregnancy. C. Disabilities resulting from an accident while traveling for work. D. Disabilities caused by mental health conditions. Answer: A. Disabilities resulting from self-inflicted injuries. Explanation: disabilities resulting from self-inflicted injuries are commonly excluded from TDI benefits in Hawaii. The other options are incorrect because B. Pregnancy-related disabilities are covered under TDI in Hawaii. C. Work-related accidents are typically covered under workers' compensation, not TDI. D. Mental health conditions can qualify for TDI benefits if they result in a temporary disability. Question 17. What does the lone occupation definition of disability typically refer to in a disability insurance policy? A. The insured is unable to perform any job due to their disability. B. The insured is unable to perform their specific job duties even if they can perform other work. C. The insured must prove that the disability is work-related. D. The insured's disability must result in a permanent inability to work. Answer: B. The insured is unable to perform their specific job duties even if they can perform other work. Explanation: the lone occupation definition of disability means the insured is considered disabled if they are unable to perform the duties of their specific job regardless of whether they can work in A different occupation. This is different from the any occupation definition, which requires the insured to be unable to work in any job. The other options are incorrect because A. Lone occupation applies to the specific job, not any job. C. Work-related disability is a different issue, typically addressed by workers' compensation. D. Lone occupation typically applies to temporary disabilities, not permanent ones. Question 18. Which of the following is an example of a disability insurance policy rider that provides additional coverage in Hawaii? A. Partial disability rider. B. Pre-existing condition exclusion rider. C. Own occupation rider. D. Lump sum payment rider. Answer A. Partial disability rider. Explanation. A partial disability rider provides additional coverage for individuals who are partially disabled and unable to perform all of their job duties. This rider helps compensate for a reduced income. The other options are incorrect because B. Pre-existing condition exclusions are not riders but exclusions in the policy. C. The own occupation rider is a standard provision, not an additional rider. D. Lump sum payment riders are rare in disability insurance policies and are not typically used for TDI. Question 19. Which of the following would NOT be covered under Hawaii's Temporary Disability Insurance (EDIA) program? A. Injury from a car accident while commuting to work. B. Illness resulting in hospitalization. C. Chronic back pain diagnosed by a doctor. D. Disability from a non-work related accident at home. Answer A. Injury from a car accident while commuting to work. Explanation. Injuries resulting from commuting to and from work are typically covered by workers' compensation, not TDI. Question 20. Which of the following would NOT be covered under Hawaii's Temporary Disability Insurance (EDIA) program? A. Injury from a car accident while commuting to work. B. Illness resulting in hospitalization. C. Chronic back pain diagnosed by a doctor. D. Disability from a non-work related accident at home. Answer A. Injury from a car accident while commuting to work. Explanation. Hawaii's TDI program does not cover injuries resulting from commuting, as these are generally considered off-the-job or accidents and fall under workers' compensation if they occur while traveling for work. The other options are eligible for TDI benefits because B. Illnesses that result in hospitalization are covered if they prevent the employee from working. C. Chronic back pain can be covered under TDI if it results in temporary disability. D. Non-work-related accidents or injuries that prevent an employee from working are covered under TDI. Question 21. Scenario question. Mr. Tanaka is a full-time employee at a software company in Hawaii. After being diagnosed with a medical condition that prevents him from working, he applies for temporary disability insurance (EDIA) benefits. His doctor provides medical documentation supporting his inability to work. Mr. Tanaka's claim is delayed because the insurance provider requests additional information from his healthcare provider. How long can Mr. Tanaka expect to wait before receiving a decision on his TDI claim? A. The claim will be approved immediately after submission. B. The claim must be processed within 7 days after all documentation is submitted. C. The claim must be processed within 30 days after all documentation is submitted. D. The claim can be processed indefinitely without a deadline. Answer. C. The claim must be processed within 30 days after all documentation is submitted. Explanation. Hawaii law requires that TDI claims be processed within 30 days after all required documentation is submitted. If additional information is requested, the clock resets, but the total time from submission should not exceed 30 days. The other options are incorrect because A. Claims require processing time, especially if there is missing or additional information. B. The 7-day timeline is not the standard for TDI claims. D. TDI claims cannot be processed indefinitely. There is a 30-day limit. Question 22. Which of the following is true about temporary disability insurance (EDIA) benefits in Hawaii? A. TDI benefits are typically paid as a lump sum for the entire disability period. B. The amount of TDI benefits is a percentage of the employee's average weekly wage up to a maximum limit. C. TDI benefits are available indefinitely for qualifying conditions. D. TDI benefits are paid directly by the employer, not the insurance provider. Answer. B. The amount of TDI benefits is a percentage of the employee's average weekly wage up to a maximum limit. Explanation. TDI benefits are designed to replace a portion of an employee's lost income while they are temporarily disabled. The benefits are calculated as a percentage of the employee's average weekly wage, with a maximum benefit amount set by state law. The other options are incorrect because A. TDI benefits are paid on a weekly basis, not as a lump sum. C. TDI benefits are limited to 26 weeks, not indefinitely. D. TDI benefits are paid by the insurance provider, not directly by the employer. Question 23. An employee in Hawaii becomes temporarily disabled due to a medical condition and applies for temporary disability insurance (EDI) benefits. What must the employee provide to support their claim? A. Proof of employment history and personal references. B. A signed affidavit from the employee's employer detailing the disability. C. Medical documentation from a healthcare provider confirming the disability. D. Documentation showing that the disability is work-related. Answer C. Medical documentation from a healthcare provider confirming the disability. Explanation. To qualify for TDI benefits in Hawaii, the employee must provide medical documentation from a licensed healthcare provider that confirms the nature and extent of the disability. This is required to substantiate the claim. The other options are incorrect because their employment history and personal references are not required for TDI claims. B. An affidavit from the employer is not necessary to file a TDI claim. D. Work-related disabilities are generally covered by workers' compensation, not TDI. Question 24. Which of the following best describes Hawaii's temporary disability insurance (TDI) program? A. A state-funded program that covers disabilities resulting from on-the-job injuries. B. A private insurance program that provides long-term disability benefits. C. A state-mandated program that provides temporary income replacement for workers unable to work due to illness or injury. D. A federal program that covers all types of disabilities regardless of the cause. Answer C. A state-mandated program that provides temporary income replacement for workers unable to work due to illness or injury. Explanation. Hawaii's TDI program is a state-mandated program that provides temporary income replacement for workers who are unable to work due to non-work-related illness or injury. It does not cover on-the-job injuries, which are covered by workers' compensation, nor does it provide long-term disability benefits. The other options are incorrect because A. On-the-job injuries are covered by workers' compensation, not TDI. B. TDI is a temporary, not long-term disability insurance program. D. TDI is a state program, not federal. Question 25. If an employee in Hawaii is temporarily disabled and receives temporary disability insurance (EDI) benefits, how is the amount of those benefits typically calculated? A. It is based on the employee's gross income from the previous year. B. It is a flat amount determined by the employee's age and job type. C. It is a percentage of the employee's average weekly wage with a maximum benefit limit. D. It is a fixed amount set by the state regardless of the employee's earnings. Answer C. It is a percentage of the employee's average weekly wage with a maximum benefit limit. Explanation. TDI benefits are calculated based on a percentage of the employee's average weekly wage up to a maximum limit. This is designed to replace a portion of the employee's income while they are temporarily unable to work. The other options are incorrect because they benefits are based on the average weekly wage, not gross income from the previous year. B. The calculation is not based on age or job type, but rather on earnings. D. The amount is not a fixed rate, but is based on earnings with a cap. Question 26. Scenario question MS. Kim, a part-time employee in Hawaii, has been injured in an accident and is unable to work. She applies for temporary disability insurance (EDI) benefits. Will she be eligible for TDI benefits (MS)? Kim is not eligible for TDI benefits because she is a part-time employee (MS). Kim is eligible for TDI benefits only if she works full-time (MS). Kim is eligible for TDI benefits if she meets the earnings requirements and has worked at least 14 weeks (MS). Kim is eligible for TDI benefits, but only for half of the full-time rate. Answer C. MS. Kim is eligible for TDI benefits if she meets the earnings requirements and has worked at least 14 weeks. Explanation. In Hawaii, part-time employees can qualify for TDI benefits as long as they meet certain criteria such as earning a minimum amount of wages and having worked at least 14 weeks for their employer. The other options are incorrect because part-time employees are eligible for TDI benefits if they meet the necessary criteria. B. Full-time status is not a requirement for TDI eligibility. D. Part-time workers are not paid half the full-time rate. Their benefits are based on their average weekly earnings. Question 27. Which of the following is a key requirement for receiving temporary disability insurance (EDI) benefits in Hawaii? A. The disability must be work-related. B. The employee must have been employed for at least 90 days. C. The employee must have been employed in Hawaii for at least 6 months. D. The disability must prevent the employee from performing at least some job duties. Answer: B. The employee must have been employed for at least 90 days. Explanation: in Hawaii, employees must have been employed for at least 90 days with their current employer to be eligible for TDI benefits. This requirement ensures that the employee has worked long enough to establish eligibility. The other options are incorrect because A. TDI covers non-work-related disabilities. Work-related injuries are covered by workers' compensation. C. 90 days of employment, not 6 months, is required for TDI eligibility. D. The disability must prevent the employee from performing their regular job duties, but it doesn't need to prevent performing some tasks. Question 20. If an employee in Hawaii is receiving temporary disability insurance (EDI) benefits and then returns to work part-time, how will the TDI benefits be affected? A. TDI benefits will continue at the full rate as long as the employee works fewer than 30 hours per week. B. TDI benefits will be reduced based on the amount of income the employee earns while working part-time. C. TDI benefits will end immediately once the employee works part-time. D. TDI benefits will be doubled to account for part-time work. Answer: B. TDI benefits will be reduced based on the amount of income the employee earns while working part-time. Explanation: if an employee returns to work part-time while receiving TDI benefits, the benefits will be reduced based on the income the employee earns from the part-time work. TDI is intended to replace a portion of the employee's lost wages, so if the employee earns income, their benefit will be adjusted accordingly. The other options are incorrect because they TDI benefits are not paid at the full rate if the employee is working part-time. C. TDI benefits are not automatically ended just because the employee works part-time. D. TDI benefits are not doubled for part-time work. Question 29. Which of the following would most likely make an employee ineligible for temporary disability insurance (EDI) benefits in Hawaii? A. The employee's disability is caused by a chronic illness diagnosed by a doctor. B. The employee fails to provide required medical documentation supporting the disability. C. The employee is temporarily unable to work due to an injury that occurred at home. D. The employee has been employed for at least 90 days with the current employer. Answer: B. The employee fails to provide required medical documentation supporting the disability. Explanation: to receive TDI benefits in Hawaii, employees must provide medical documentation that verifies their inability to work due to a qualifying disability. Failure to submit the necessary documentation will result in ineligibility. The other options are incorrect because A. Chronic illnesses that prevent work are eligible for TDI benefits if they meet the program's criteria. C. Disabilities that occur outside of work, such as at home, are still eligible for TDI benefits. D. Being employed for at least 90 days is a requirement for eligibility, not a reason for ineligibility. Question 30. Scenario question MS. Okamoto works as a cashier at a retail store in Hawaii and is injured while lifting heavy items at home. She applies for temporary disability insurance (EDI) benefits after being unable to work for several weeks. The insurance provider denies her claim. Why might her claim have been denied? A. TDI benefits only cover disabilities caused by work-related injuries. B. TDI benefits are not available to employees who work in retail. C. TDI benefits are only available for disabilities caused by car accidents. D. TDI benefits do not cover disabilities resulting from injuries that occur outside of work. Answer: A. TDI benefits only cover disabilities caused by work-related injuries. Explanation: TDI benefits in Hawaii cover non-work-related injuries and illnesses. However, if Ms. Okamoto's injury occurred at home and was deemed to work-related, e.g. during off-the-clock work duties, it could be ineligible for TDI benefits. Workers' compensation would cover injuries caused at work. The other options are incorrect because B. Retail employees are eligible for TDI benefits. C. TDI benefits are not limited to car accidents. D. TDI does cover injuries outside of work as long as they meet the program's criteria.